Have you heard what the Social Security Acting Commissioner just confirmed? This update has the potential to change the way millions of seniors think about their taxes and their monthly finances. While a lot of headlines are claiming that seniors are getting a $4,000 check, the truth behind this announcement is both interesting and a little bit misunderstood. What's really happening is that a new piece of legislation has been introduced that includes a provision for a $4,000 tax deduction specifically for seniors aged 65 and older. This is being referred to by some lawmakers and advocates as a key benefit for older Americans as part of a larger economic relief bill. But it's important to break this down carefully, because while it sounds like a big windfall, it's not a direct payment, and it's certainly not a bonus added to your Social Security benefits. This is a tax deduction, which means it reduces the amount of your income that can be taxed. It doesn't increase your monthly check, and it doesn't come in the form of a separate payout. If you're not filing taxes or don't have enough income to be taxed in the first place, this may not benefit you at all.
Frank Bisignano, the new acting commissioner of Social Security, recently appeared in an interview to talk about this very topic. He explained that his office has been receiving a steady stream of calls from seniors who are hearing about this $4,000 and are curious, hopeful, or even confused about what it really means. Frank confirmed that yes, there is a new provision in the proposed bill that offers this $4,000 deduction for seniors, and that yes, it could help reduce the tax burden for many older Americans. But at the same time, he made it clear that this is not free money. It's not a check you're going to receive in the mail. It's not a benefit added to your existing Social Security deposit. It's a deduction that applies when you file your taxes, and only if you meet the criteria. For a lot of people, this will simply mean owing less or potentially not owing anything at all. But if you're already below the income threshold for paying taxes, you may not see any difference at all. To really understand what this deduction means, you need to understand how taxes work for retirees. Most seniors receive Social Security as their primary or only source of income. In many cases, that income is already below the standard deduction level, which means they don't owe federal income taxes and may not even file a return. If you're in this category, the new $4,000 deduction won't make much of a difference because it only helps if you already owe taxes. However, for seniors who have other sources of income like a pension, a 401k, or investment income, this deduction could help lower the amount of taxable income and reduce the amount owed to the IRS. Let's say, for example, that a senior has a total income of $20,000 for the year. The standard deduction for seniors filing singly is already around $15,000, and with this new $4,000 deduction, it could rise to $19,000, meaning only $1,000 of that income would be taxed. That's a small but real benefit, and it could make a meaningful difference for those on the edge of the taxable income threshold. But the key issue here is understanding the difference between a deduction and a credit. A deduction reduces how much of your income is subject to taxes. A credit, on the other hand, is a dollar-for-dollar reduction of your actual tax bill. And a refundable credit means that even if you don't owe any taxes, the government will send you the difference as a refund. This $4,000 provision is a deduction, not a credit. That's a major distinction, and it's why this news has caused so much confusion. A lot of people have seen or heard headlines that say $4,000 for seniors or $4,000 Social Security bonus, and they think it means they're getting a check. But that's simply not the case. The government is not mailing out checks in this instance. It's just a deduction that will apply when taxes are filed next season, assuming the legislation passes both chambers of Congress and becomes law. Frank also talked about how this measure is part of a broader bill that's been nicknamed the Big Beautiful Bill. That phrase has been used in political circles to refer to a large, sweeping reconciliation package that includes various tax credits, deductions, and other forms of economic relief. The purpose of this bill is to help low- and middle-income Americans with inflation, the rising cost of living, and other financial pressures. For seniors, the cost of healthcare, housing, food, and medications has been rising faster than their fixed incomes can keep up. So the idea behind this tax deduction is to give a little relief in the form of a lower tax burden. But once again, that relief is only real if you are someone who is filing taxes and has taxable income in the first place. One of the reasons this story has gained so much traction is because of the number of calls the Social Security Administration is reportedly receiving. Frank noted that the call centers are hearing from seniors every single day who are asking about this $4,000. But that's where things get a bit tricky. When someone says they're getting calls every day, it could mean 2 or it could mean 2,000. It's unclear just how widespread the confusion really is, but what's clear is that enough people are hearing about it and wanting more information. Unfortunately, a lot of that information has been presented in ways that can be misleading. Content creators and websites sometimes use catchy headlines that suggest seniors are getting extra money, when in reality, they're being offered a tax break that only applies in specific situations. It's easy to see how this causes a lot of misunderstanding. It's also worth noting that this new $4,000 deduction is essentially a compromise. For years, there have been calls from lawmakers and advocacy groups to eliminate the taxation of Social Security benefits entirely. Under current law, many seniors pay federal taxes on a portion of their Social Security income if their total income exceeds certain thresholds. These thresholds haven't changed much in decades, which means more and more seniors are being taxed on benefits that were originally supposed to be tax-free. But reforming Social Security directly is legally very difficult, especially under a process called reconciliation. Reconciliation allows certain budget-related legislation to pass the Senate with a simple majority, 51 votes instead of 60, but it comes with strict rules. One of those rules is that you cannot make structural changes to Social Security through reconciliation. So instead of eliminating taxes on Social Security outright, lawmakers added this tax deduction for seniors as a sort of workaround. It's not a permanent fix, but it's something. And that's why Frank's comments are getting attention. He's confirming that this is a real proposal. He's confirming that seniors are asking about it. And he's confirming that for some people, it could be a helpful tax benefit. But he's also not saying it's a $4,000 bonus or a check, because it's not. It's a deduction, plain and simple. The acting commissioner also emphasized that it's important for people to be cautious about where they're getting their information. Misinformation spreads quickly, especially when it comes to government benefits. There's a lot of content online that exaggerates or misrepresents what's really happening, and that's why it's so important to hear directly from officials or from trusted sources that can explain what's actually going on. As with any tax-related topic, it's always wise to consult with a tax professional before making any decisions. Everyone's financial situation is different, and what works for one person might not work for another. If you're unsure whether you qualify for this deduction or if it makes sense to file a return, a professional can help you evaluate your options. The Social Security Administration itself does not give personalized tax advice, so don't expect their call centers to walk you through your individual return. They're there to help with Social Security benefits, not tax planning. But they can confirm that this deduction exists and that it's part of the proposed legislation currently being reviewed by the Senate. There's still some uncertainty about whether the bill will pass in its current form. It has passed the House, but the Senate can change it, amend it, or reject it altogether. So while the $4,000 deduction is in the bill now, that doesn't guarantee it will remain there. Lawmaking is a complex and often unpredictable process, and things can change at any moment. If the bill passes, the deduction would likely take effect for the upcoming tax year, meaning seniors would see the benefit when they file their next federal return. That gives people time to prepare and understand what it means for their financial planning. In the meantime, staying informed is the best thing anyone can do. It's also helpful to talk with family members or trusted advisors who understand these issues. If you have parents or grandparents who are on Social Security, you might want to sit down and help them understand what this change does and doesn't mean. The last thing we want is for seniors to be misled into thinking they're getting money they're not actually entitled to. Financial scams and misinformation can be especially harmful to older adults, so having honest, clear conversations is essential. That's why videos like this one are so important, to provide clarity and help people separate fact from fiction. So to sum it all up, yes, there is a proposed $4,000 tax deduction for seniors in the current legislation. Yes, the acting commissioner of Social Security has confirmed it and spoken about it publicly. Yes, it could help reduce the tax burden for some seniors with other sources of income. But no, it's not a check. It's not a cash payment. It's not an automatic bonus. It's a deduction that only helps those who file a return and have taxable income. That's the reality of it. Understanding that reality is key to making the most of any potential benefit and not getting caught up in the confusion or hype. Stay tuned, stay informed, and make the best decisions for your unique financial situation. That's how you stay ahead, even when the rules keep changing.